All right, we are on learning objective 4.3 in preparing a post-closing trial balance. I don't actually have this listed on our process that I gave you just because trying not to muddy up the water too much. It's not really required that you do a post-closing trial balance. But think about you've already closed all the temporary accounts. So the only thing that's going to be left on a post-closing trial balance will be the assets, liabilities, and owner's equity. Sorry. All right. So that's it. There's really nothing to do on that. That it's not something that's going to be published or anything, but here you can see you have your assets, liabilities, and owner's equity, and you only have the capital account, not the withdrawal account, because the revenues, expenses, and withdrawals are all closed to the capital account. Okay. I've already talked about the accounting cycle. They have kind of their version. It's almost exactly the same thing. I like mine. It's a little bit more simplified, I think. Okay. We did talk about the current ratio. Remember, we did that current ratio is the current assets divided by current liabilities. So we did go over that. Okay. And here is the actual current ratio for a business. Oh, this is PepsiCo. Look at their current ratio is 0.83. So they they want it to be 1 to 1 and higher. Remember, I told you it can get too high, but 1 to 1 means for every dollar you owe, you only have $1 in your checking account to pay those bills. We like to have a little bit more, don't we? We usually do. Um, in this case, PepsiCo is probably managing some things in their long-term assets that if they needed to, they could push them back up into current assets, like some um, short-term investments, things like that. Okay. We talked about a worksheet in the previous chapter, and it's here again. This is exactly what I had copied over into chapter 3. This was from chapter 4. Um, right here, I want you to see that's that net income. Here's my revenues minus the expenses. So I have net income of 85.50. Here is another check figure. Okay. When you're doing this worksheet, you're probably going to have to do this for the continuing problem. That number should be the same in your closing process and it should be the exact same in the income statement. Okay. So things like that, like you don't may not know, have a clue of what you're doing. But you're like, hey, that number has got to equal that. So, you could take that number and go put it into the income statement to make sure you get at least a few points right. Okay. All right. There's our accounting process. Are done with the process. We've done everything here. We've learned to make journal entries. We've posted them to the ledger. We prepared an unadjusted trial balance. We learned how to make adjusting entries. Then we prepared an adjusted trial balance. Then we did the financial statements and then the closing entries. We could add a post-closing trial balance at the bottom of here. Nobody's ever going to ask you to do that. But if they do, just remember it's only going to have the permanent accounts on it because revenues, expenses, and withdrawals have all been closed. So it would only be assets, liabilities, and owner's equity. Those are your permanent accounts. There's your little acronym. Okay. Your permanent accounts, that's the only thing that would be in that post-closing trial balance. Okay. And that is all for chapter 4. I will see you in chapter 5.